All right. Now that we got the stream up and running, let's see how she goes. All right, guys. So, starting off my week, I'm going to be giving you guys an analysis on the US dollar, and I'm going to also be going over the Great Britain pound. So, super hyped today. We've got a lot of great news coming up this week. Before I start this live stream, I just want to make sure that you guys all got me on Instagram at _currency academy, where I have been posting my results for a extended period of time, and this is just kind of like my credibility stamp. I got a bunch of stuff on here. I also have access to my Discord server where I do post free occasional signals sometimes, so that might be worth checking out if you're interested in that. Now, without further ado, let's hop on over to the news for the week. So we have a lot of stuff coming up here. So today we had our ADP non-farm employment change, and we also had ISM manufacturing PMI numbers. Now, these were actually better than expected, but these numbers were not. So this actually had a very negative effect on the US dollar today. Now, if you don't already know what the ADP non-farm employment change is, it gives you a really good rundown on this website called forexfactory.com. If you guys haven't already checked it out, highly recommend checking it out. I found this because other great YouTubers like myself actually showed me the resource, so shout out to them. Actually, Trader Nick specifically, but other than that, we have the measures of what it changes. So the estimated change in the number of employed people during the previous month, excluding the farming industry and government. So when the actual effect is greater than the forecast, it is good for the currency pair, and when it is the actual effect is worse than the expected, then it is not good for the currency pair. So essentially, we see a worse than expected forecast here. We were expecting 640,000, fell short at 374,000. So actually, you could watch the correlation of that with the US dollar today and over the past little bit right here. And on top of that, I wanted to speak on the higher time frames specifically today, because I am really looking at the US dollar currency index, because I am trying to show you guys the importance of looking at a top-down analysis when it comes to these things. So as you may know, I trade in support, in resistance, and these things are levels that I trade in where I believe the banks are getting in on their entries at the very, very bottoms and the very, very tops. So essentially, I have a 200 exponential moving average, which takes the last 200 days worth of candlesticks, and they average it out and put it on the line. And then I have a 50 exponential moving average, which takes the last 50 days worth of candles. Now, as you can see, for the US dollar, we have come to a point where in the past it has bounced off of. So in this general 89 area right here, 89, 90, 88, right, we have seen the US dollar have a bullish support. That means that there was a strong bullish presence at this level for the US dollar. We saw the US dollar have good news and continue in the upward direction. Now, we approached resistance right here, where we see price in the past bouncing off of, and we expected price to go down for the US dollar. So now, as you may see, we are back in the same type of situation that we were back in 2018, around June, this time period. Now, we're seeing the same sort of thing happen here, but I think that we're going to see some bullish strength for the US dollar over the time coming. I want to say that I have hope. I got to admit, we do see a cross of the moving averages, and we see, buyer candlesticks at the very, very bottom. So this shows me a lot of strength. There's a lot of confluences here for the US dollar. It's super strong. As for my positions with Great Britain pound US dollar, Great Britain pound US dollar, I'm going to scroll out again so we could check this out on the daily time frame. So as you can see, same sort of picture here. We have our resistance zone here, and we are coming to this area again, and we see it as another area of interest. Now, previously, we saw a 50 EMA pass over the 200 EMA towards the downward direction, and we hit support right here. Now that we're back up to this resistance area, we are looking for the short trades. That was my idea here. I have to say that I have been kind of worried about this. Now we've seen price in the uptrend, go up, retrace, go up, retrace, go up and retrace, right? Now we have seen a break of this trend line. We've seen a break of these higher lows, and now we've come to the resistance. And then if you look at the very top of the resistance, we see bearish engulfing candles, okay? So that means the banks at the very top of the daily chart are pushing price down. Now, on top of that, we're breaking off we're breaking off the moving averages. We're coming down towards the 200 EMA. So right now, I do have to say this is a very pivotal point in the trade for Great Britain pound against US dollar. I think that I did set up a retracement from the last swing high to this most previous swing low right here, and now we're waiting for this retracement. Now we got the retracement off the 61%, which is super clean, and we have the bearish engulfing candle off of the 61.8%, which is showing us super strong strength for Great Britain pound going down against the US dollar. Now, as I'm saying here, this is important that you use these two charts in confluence, because we are looking at the currency index for the US dollar. We see that we're possibly going to be having some bullish strength in the upcoming months, in the upcoming year. So we want to use that information and say, okay, I think the Great Britain pound might be falling, and I think that the US dollar might be rising. Now, I'm not a financial advisor. This is just what I believe is kind of going on here. Now, we are also going to go pop on over to USDCAD. Now, if you did watch my very last YouTube video, I did drop a signal on USDCAD, which actually ended up smashing take profit. So I hope you guys enjoyed that video. If you haven't, make sure you go back, check that out. I also went over a $788 gold trade that I took in that video. That was really crazy. Make sure you do that after the stream. But anyways, now I'm going to give you another golden ticket on USD Canadian dollar. So we're going to scroll out, and we're going to obviously look at the bigger picture of things again. So we have seen this period of consolidation within these support and resistance zones. We know this is a zone up here because price has come all the way to the very, very top. It's peaked. It's shown us that this is where the banks are getting out of the market. At this level, we've peaked right here. This is where the banks are getting out of there. And as we can see, we have a support down here where price has bounced off of multiple times in our direction to the upside. So we know that there is liquidity down here at this bottom level because price has bounced off of here before. So now with that knowledge in our head, now that we know that we're looking for buy positions, we want to look at the price action. So what is happening with the candlesticks, right? We're looking at the price action at the very, very bottom at the 1.2, 1.21 range, 1.22. We see bullish engulfing candles at the very bottom. You have to keep in mind that banks are putting their positions like this. Like, I promise you, banks are all the way down here like this, and they're literally going to like the extremes. They're pulling their take profits like all the way up here, and like this whole time you're just getting in and out of positions, getting cooked, and they're just holding their positions, just taking profit, right? And holding their profit, right? So we see this bullish strength. We see a bullish engulfing candle here. So this is buyer strength. Get in, right? Continue the trend. Now see, we break above the 50 EMA, and then we retrace. We touch it once. We continue in our way. Now we've touched over the 200 EMA for the US dollar against the Canadian dollar. We've retraced again to the 50 EMA, right? And now we've continued in our direction up above the 200 EMA. And now I see, oh, I actually just moved that. But as you can see, we see another retracement down to the 2 EMAs. And now we see buyer liquidity in the market, okay? We drew our tool on. I'm going to show you how to use this tool, right? So we drew our tool on from the most previous spot. We have to look at the pivotal spots in the market, okay? Where did price bounce off of last, okay? It bounced off of right here, and then we want to see where it bounced off of again, point A and point B, right? I have plenty of videos on this concept. If you don't already understand trading with the Fibonacci retracement tool, go watch part 1 and part 2. You will have a greater understanding of trading in the upward direction or downward direction. Now, as you can see, we see again price come up, come off our 0%, retrace down to our golden area where we have our 61% and our 78%, and we see a bullish engulfing candle. Again, super strong buyer strength in the market. We look to see the US dollar climb in the upcoming weeks against the Canadian dollar, hopefully breaking this long-term downtrend that we have been in, because I think that we need to see some more liquidity for the US dollar. Yeah, so hopefully all goes well with these trades. Definitely have an eye out on all of these trades. Make sure you also keep your eye out on Friday at 8:30 a.m. for all of these, the non-farm employment change, all this stuff. There's going to be some pretty hot news. That news is definitely going to move the US dollar, so make sure you stay tuned. I might live stream, I might not, I don't know. I might drop a video on it. Let's see how it goes. Maybe I could catch a trade off of it. We'll see. But yeah, I hope you guys enjoyed the live stream. It was short, but it was sweet. I hope you really hope you enjoyed this one. I'm getting tongue twisted here. I really gotta hop off, but hope you guys enjoyed. I'm out.